You know that little piece of plastic in your wallet? It's one of the most powerful financial tools ever invented. Seriously. It can unlock free travel, protect you from fraud, or it can trap you in debt for decades. The whole difference is knowing how to master the system before it, well, masters you. All right, let's get into it.
First things first, we've got to solve a mystery. Have you ever noticed this? Handing over, say, 5 crisp $20 bills feels like a real loss, right? But tapping a card for that exact same amount, it feels like, well, pretty much nothing at all. So what's going on? The answer isn't in your wallet. It's actually inside your brain.
Yeah, believe it or not, neuroscientists actually have a name for this. They call it the pain of paying. See, when you use physical cash, it literally activates a part of your brain called the insular cortex. That's the same part that lights up when you stub your toe. It's a real physical feeling of loss. But credit cards? They're like a painkiller. They completely numb that feeling, making spending almost frictionless.
And here's the really clever part, or maybe the sneaky part. The whole system is designed to take advantage of this. Credit cards create this time delay, right? You get that dopamine hit, that little thrill of the new purchase today, but the pain of the bill, that gets pushed a whole month into the future. And by then, your brain doesn't even connect the two things anymore. It's this decoupling. That's the secret psychological trick. It's what gets all of us to spend more without even thinking about it.
So while your brain's being played like that, what's actually happening on a technical level? I mean, in those 2 seconds it takes for your purchase to get approved, there's this incredible high-speed digital relay race happening all around the globe. Okay, let's break it down real quick. Step 1. The store sends your purchase info to a network, like Visa or MasterCard. Step 2. The network zips that request over to your bank, they're called the issuer, to ask, hey, is this okay? Step 3. Your bank's AI checks everything in a millisecond and shoots back a yep or a nope. And finally, step 4. The network tells the store approved. And get this, the whole thing happens in less time than it takes you to blink. It's wild.
Now, of course, your bank's decision to say yes all comes down to your financial reputation. And that entire reputation, it gets boiled down to one single 3-digit number that honestly, quietly governs a huge part of your adult life. I'm talking about your credit score.
So let's break down the formula, because it's not as complicated as it seems. Just forget everything else for a second and focus on the 2 biggest pieces of the pie. A massive 35% is just your payment history. Super simple. Do you pay your bills on time? Then another 30% is amounts owed. Now this one's a little tricky. It's not how much you owe, but how much of your available credit you're using. Put those 2 together, and you're looking at 65% of your entire score. That's huge.
So here's the crucial takeaway on that. Lenders hate seeing you use too much of your available credit. It's a red flag, it makes you look risky, maybe even a little desperate. So the golden rule, the one thing to remember, is to keep your balance below 30% of your credit limit. So if you've got a $10,000 limit, you never want to balance over $3,000 to show up on your statement. I'm telling you, this one single habit has a massive impact on your score.
Okay, so all of this, the psychology, the score, it all builds up to one crucial point. Once you get it, you realize that every single person with a credit card is on one of 2 very different paths. Your card is either a trap that's costing you money, or it's a tool that's making you money. And trust me, there is no in between.
And the choice between those 2 paths, it all boils down to one single decision you make every month when that bill shows up. Do you fall for the trap of paying just the minimum amount due? Or do you use the card like a tool and pay your statement balance in full?
Let's just look at the scary math of the trap for a second. That minimum payment? It's an illusion. It feels affordable, but it's not. Let's say you buy a $1,000 laptop with a card that has a pretty typical 24% interest rate. If you only pay the minimum each month, it's going to take you over a decade to pay it off. And here's the kicker. By the end, you will have paid the bank almost $2,200 for that laptop. Think about that. You paid for 2, but you only got 1.
And the consequences just ripple out from there. On the trap path, you're paying hundreds, maybe thousands in interest. You're barely earning any rewards, and that high balance is just crushing your credit score. But on the tool path, you pay 0 interest, you earn the maximum rewards, you get incredible fraud protection, and your score just steadily climbs. It's a totally different world.
Okay, if you remember one thing, let it be this. The minimum payment is not a repayment plan. It is a subscription to your own debt. It's not designed to get you out of debt, it's designed to keep you in it. You're not really paying the bank back, you're just paying them for the privilege of owing them money for 1 more month.
But okay, enough of the scary stuff. Let's talk about the sunny side. Because when you master this system, when you use your card as a tool, you unlock some incredible perks. I mean, you're earning cash back or points on literally every single purchase. You have zero liability if your card gets stolen. A lot of cards automatically extend the warranties on things you buy, and even give you free travel insurance. It's basically like having a personal accountant and an insurance agent working for you for free.
So how do you make sure you're always on the right path? Well, it all comes down to a really simple set of rules. Think of this as the winner's playbook.
All right, here they are, the golden rules. Number 1, pay your statement balance in full every single month. No excuses, no exceptions. 2, keep your utilization below that magic 30% number we talked about. 3, never ever use your credit card on an ATM for a cash advance. The fees and the immediate interest are absolutely brutal. And number 4, the easiest way to stick to all this? Just set up autopay for the full statement balance. You automate the good behavior so you don't even have to think about it.
Look, at the end of the day, the system is pretty much designed for you to fail, but it really doesn't have to be that way. Once you understand the rules of the game, you can completely flip the script and reverse the roles. So I'll leave you with one final question to think about. Is your card your tool, or are you its?